Hey, welcome to the closing beat, everybody. Happy Wednesday. How you doing out there? There we are, right there. Hope all is good. Welcome. Hey, we're financial advisors here at Jazz Wealth. You know the name. How we doing out there, Doc, Matt, Mr. or Mrs. Taco? I don't know if a taco is male or female. What is a taco? Cody? You going non-binary on the taco thing? Is a taco male or female? What's up? Hey, we got a special birthday week coming up here. This weekend there will be no notes from Jazz because we're celebrating a super secret birthday. Actually, it is mine and my wife's birthday celebration, and nobody knows what we're gonna do. There are now 17 people that will be joining us. I have friends. Well, they're all family, but I have friends. Anyways, we're doing something secret. We haven't told anybody what it is, and everybody's freaking out because they can't figure out what it is. There will be a Wine and Wealth tomorrow. That will be tomorrow night at 8 o'clock. We'll be talking about investments, the retirement, the markets, and such. Last week, we did a deep dive into the data on every bear market there, so you can check that one out if you want. And soon in the dojo, we will be testing out the live chat feature. Can we just talk with you while you're there? If you're in there looking around, can we help you? So we're going to be testing that out there. Also, on the bottom right side of your screen, you could see our FinTips videos this week. And if you're interested in that, those are free. You can check them out. So we're doing stuff all the time. You know what I mean? We're teaching financial advisors. We love the idea of teaching. We take a lot of extra time to teach. And hopefully today you learned something as well, because I've always got good stuff to share with you here today. Also, for my 40th birthday, I haven't done it. You know, we were like, let's get tattoos. You know, I've never had a tattoo before. And so I had my daughter do a henna for the only thing that works. Right there, man. If you don't know, I actually do have 4 fingers on this hand and 5 on this one. So I said, you know what works? Look, it fits perfectly. So it's not a real tattoo, but I thought, wouldn't that be a great idea? And, you know, they should make everybody do henna tattoos first, because I was like, yeah, that's not going to work. I can't do that. But it does fit, and it is stuck on me for the next week or so. I don't know how long it lasts on there. But anyways, what do you think? Huh? Go straight? Should I do that? That's kind of our saying around here. Anyways, let's talk about the stock market, because that's what you're really here to see. You could care less about what I stick all over me there. Did you notice a little bit of summertime trading vibe out there today? I don't know if you picked up on it, but we're getting things started. We go over to the charts and take a look here today. You got early morning volatility and a little bit of a bounce there throughout the day, and then just quiet, right? One little move, that's a 5-minute time period, so don't let that mislead you. One little move here that it came right at the 2:15 reversal time, common among day traders. And then nothing right till the end of the day, right? And then this is the actual end of the day, just a little 10-minute sell-off. But, yeah, I mean, there was really nothing there. That's our second day where we've seen a hint of the markets going into this summertime activity. I don't know if that lasts or not, but we'll see what happens there. Well, as far as the S&P goes, you got May is officially over. Did you see that May gained? It was positive by 0.01%. 1 point difference between the month start and the month end. So all that work that we saw in the month of May ended up being just a little gain. I'll take it. I'm not complaining, but that's what we have there. Almost half the days in May, which you probably could see by the charts there, almost half the days in May were 2% moves or greater. I mean, volatile, right? So you can imagine that June will not be like that. And June is already starting to give us that hint that it's trying to slow down there. Interestingly, if you were to look, a lot of people like to use the equal weight S&P during moments of weakness in the economy and stuff. It falls less than the S&P because it's equal weight. Remember, in the S&P, the way it works is the more valuable a company is, the more say it has, the more weight it gets to pull on the S&P. Well, that's not the case for the RSP. That's an ETF you can use. It's the equal weight ETF where every 505 stocks gets treated exactly the same way. That actually gained 1% for the month there, and it's only down about 8% year to date. Again, it does fall slower than the market, but it goes up slower than the market. Not always, but for the most part, if you're a long-term investor, that'd be a little bit tough. So that's what you got there. All right, let's take a look here at some winners and losers, man. How did we do? So we'll start with the top 19 best performers in May, and that's only because I accidentally cut off the 20th one. I meant to give you 20. Here we go. So we got Albemarle. Oh, first thing I want you to notice is, look at, did energy not dominate, right, through the month of May? You know that. Like, you've seen it, right? So we got tons of energy names. More than half the names on the list were energy. Most of the rest were tech. And that was the late month attempt to give you a little bit of a rally. Albemarle gives you the top performer at 40%. You're going to find energy, Devon being the next, EPAM, and then which is tech, and then you've got Occidental Petroleum in there to almost wrap out the top 5. The only utility on the list was NRG Energy. And what I did is I also put the year-to-date performance. So you could see if something was really weak ahead of time, right, like the EPAM over here, and all of a sudden gains 27%, something's going on. I don't know what it is, but something's going on. Down here, right, AMD was down a bunch, almost 50%. It rallies 20% all in the month of May. That's excitement. That's telling you, hey, can I find any other semiconductor company in here that has that kind of performance? Not in the top 20 anyways. So that tells you that if people are looking to buy semiconductors, they're looking at that stock for the moment. Valero and the rest of the energy stocks were already up a whole bunch there. Occidental Petroleum is the biggest performer so far year to date, now at 144%. And those rank out your top S&P May performers there. If we look at the worst performers, you're going to see something much different. Consumer discretionary, or often called consumer cyclical, as we've put here, those were your worst performers. And we think there's weakness in the market, the economy. Everybody says is going to get soft, so you can kind of understand some of the names. Under Armour gets ranked for, it's a tie. There's two different classes of stock there. Other than that, you got Dexcom in there. It's having a real rough start to the year. You've got Expedia in there. You can understand why they're weak. The retailers would be Target, and down here you've got Walmart. Bath & Body's in there somewhere. There it is. So any retailers that aren't on the luxury side of retailing, they didn't perform very well in the month of May. Anything that is on the luxury side has actually done quite well. And so that's what we got going on there. The worst is going to be Etsy. So Etsy has the worst year-to-date performance. Looking at Algen's going to have the second worst year-to-date performance. And then we go all the way up here back to Under Armour, with the third being down about 50% year-to-date. And that is your best and worst for the month. Not very good, man. Where are we going to go with this? Where are we going to go here? That's basically in the S&P. Now, going forward, we know that June, I don't know if you know this, June can be a rough month. I know it because it's my birthday month, and I always notice the markets tend to be a little bit weak. We also just had this monster rally, mean reversion type rally, right? And so what does this typically look like? We look back the last 20 years. Here's what we've got. So if we look at the Dow, and we only did this because we like to go back 100 years when we share this with clients. But here's every single month and the average performance of each month over the last 20 years. So, for example, over the last 20 years, January has averaged a 0.66% loss. Throughout most months, it's actually quite strong. The end of the year tends to be stronger, Santa Claus rally and all the end of the year rally and all that stuff. And then in the middle here, you've got June. It averages a slight decline, all right? Now, if we look at the number of times that the market actually ended up being down, we do this because we don't want it to be that there were gains of 1% in June, but there were a few years where June maybe lost 8% or something, and it skews the averages. So what we actually do is we look at the positivity here as well. So June ranks as the worst month for being positive. Only 40% of the time is it positive. In other words, of the last 20, over the last 20 years there, you have 12 years that finished down, right? So it couldn't be that there was one really bad year. We don't show the median in this case, but it gives you an idea that other than January, this is the worst performing time of year. If you're looking to invest money and hope that it goes up only in this month, you wouldn't want to pick June. You'd probably want to pick somewhere towards the end of the year, or if you're going purely based on the stats, you'd go with April in this case. But I just wanted to share that with you as well. Even worse, by the way, is when the market is down year to date, all the way to May. So we got January, February, March, April, May. This has happened 10 times, right? 10 years of the last 20. When the market is down, June's average return was actually worse, 2.2% to the downside. So what do we have this year? We have year to date, we're down, and we have a June that's, well, started off a little weak already. We're halfway to the 2.2% almost, if you want to do it that way. But realistically, like, you look at that and you go, that's okay. Down 2.2% average. That's like a Monday afternoon here. That's not a big deal. 2%. Everybody can live with that. Anyways, let's go on over here to the NASDAQ. Still down 22% year to date, but tech has been trying a little bit there. Now, inside of tech, you've got Amazon helping the most, and Microsoft. Yeah, this is not going to work. Microsoft helping the second most. That's a close second there because those two are the largest weights. One of the two of the four largest weights in the NASDAQ there. They're not the largest by any means. So anyways, that's what you got there going on in the NASDAQ. You got the Russell. It feels like this is the worst index out of all of them, but actually it's in third place. The NASDAQ is the worst performing index so far this year there. We got a loss of about 16% in the Russell. I'll tell you, if it wasn't for the energy stocks, small cap energy stocks like you've got OVV, AR, I was just looking at some of these earlier, Antero. If it weren't for these small cap energy stocks, the Russell would be down easily. It'd just easily be down on the year. So you could use the IWM, whatever you like to look at the Russell. You're going to find a lot of weakness there. Now, I do want to point out the crude oil there, gas. National average hitting another new high. Seems like that's happening every single day. It doesn't seem like a lot of people really care. A lot of government officials don't really care. New national average is $4.67 a gallon. That's the highest ever. Oil is now up 6 months in a row. There's a fun fact, actually. So I looked back to 1983. And I said, well, let's just see, does that often happen? The longest streak in terms of months for oil being up is 8. That happened back in 2010. But why did I pick 1983? Some of my older folks here might remember. In 1970 is when Richard Nixon said, we're going to put a cap. Oil just can't go any higher, right? Did you know the government can do that? So they said, we're going to put a cap on oil prices, just not going to allow it to go outside of a range here. That did not work very well. There was a lot of, it's not insider trading, but basically oil traders were making up fake trades to get around it. It's kind of a fun story there if you want to see like a weird, way for them to make money. They sucked it right out of the retail public there. So they basically still made their money there. But what happened there is Jimmy Carter started reducing the oil cap. I forget what they called it. And then Ronald Reagan actually said, no, let's just speed that up. Let's just get rid of that there. And so from 1983 forward, we actually have a normal market-based pricing system for oil. Whereas before that, if you were to run data and say, how often did oil make a monstrous move? Well, it wasn't going to happen during the Nixon years and leading all the way up to Reagan, which was the end of 1982, right? So anytime before that, up to 1970, your data is going to be squished. So you kind of got to know your data if you're going, or know your history a little bit if you're going to be trying to run some data on things. Otherwise, you're going to get a lot of skewed things there. I will say this about oil real quick. You got a monster move here. And in energy, use the XLE. Monster move. We know it is the best performing sector. No question about it. But remember when stay-at-home stocks, the COVID stocks, were the best performing area, and it seemed like they would never fall? Now they've all been crushed. The same thing will happen here. I don't know when. It's very difficult to decide that, but this will not continue. So there will be an exhaustion in energy and in oil, and it will likely come rather quickly. Yesterday I talked about how that looks, right? How fast things like to erase in the oil markets there. Just be careful on that one. So I just wanted to point that one out, that just like pot stocks, just like COVID stocks, just like GameStop, even though I see it's up after hours there, just like all these stocks that get really exciting for a while, the excitement comes out of them, and that's a painful thing to go through if you have to. Speaking of maybe painful, Friday we have the unemployment numbers coming out. Unemployment rate should be ticking lower. It's expected it's going to tick lower to 3.5%, right? Is that a good thing, though? Like, you already have a lot of analysts thinking this. Like, okay, unemployment is going to hit 3.5%. That's essentially full employment, right? So if you're not an economic nerd and stuff, you don't like this stuff, 3.5%, that's full employment. That's a nice way to say it there. Everybody that wants a job can get a job. So how can we go into a recession if everybody that wants a job can get one, and it would seem that everybody that wants a job has one, right? How can the economy go backwards? Isn't that weird? If we're all working, generating money, wouldn't the economy hang in there and be okay? And the truth is, the answer is no. In this case, we can still have a recession, of course. One of the reasons is that all these jobs that people can have and go have at the moment if they want, a lot of them are service-based business. Our economy has shifted over the decades into a service-based economy. You can't grow at you can grow, but you can't grow at any meaningful rate offering services, right? And they always pick on the waitresses for this. I don't know why it makes the news, but they'll say, everybody can't be a waitress and expect the economy to grow. Well, that's a cruel way of saying it, right? They mean everybody can't go out there and sell their time and expect the economy to grow. We need to make stuff. We need to physically produce stuff, widgets and things that people can buy. And so that's why this very well could be that we find out we're in a recession at full employment or max employment. It would be really, really weird to see that because that doesn't happen. But it's very likely that's the path that we're heading down. All right, rambling is done today. Let's go on to the new highs and lows list today. Hey, here's a summertime preview. Look at that. You got 2 new highs, 3 new lows, next to nothing moving on the plate. That's another example of maybe the market wanting to try to move into the summer doldrums, as they call them. So for that, I put all 5 of them on the list today. I'm not saying one's better than the other. You got Moody's hitting new lows here. Recovered nicely off the lows, but still hitting new lows. And then SP Global was the reason why. That one did a little bit better, still lost 5% on the day. Medtronics also hitting a new low. That's the other one. And that one's just a fresh breakdown there. Nothing special going on that you'd want to look at. Phillips 66, like I said, these are extended. These are tough areas to invest in right now and to chase, but it just won't stop. Right? Especially Phillips. It just has no interest in stopping. And then you got W.R. Berkley, insurance company here. Just breaking the new highs, but I don't have anything exciting. I needed something to put there. Those are the 5 names. Let's move on. Stocks in the news here. We go. We got Capri. And then I'll take your questions. If you have questions, feel free to post them there. We'll let this catch up while I'm going over this and then do our thing. All right, so Capri comes out with earnings there better than expected. The big excitement was they're buying back $1 billion or $1 billion. Yeah, $1 billion. That's about 12-13% of their total value there. That's Michael Kors, luxury brands like that. Remember, these guys are doing better. Right? Luxury brands. Even, who was it? Did I put it on the list today? Wells Fargo? So Wells Fargo even says our deposit levels have remained quite high here, but they're coming down for everyone besides the rich. They used a better word, affluent. So they're saying, okay, deposit levels are healthy, but they're starting to fall, meaning people are starting to spend the money that they otherwise would have saved, unless you're rich, right? And so remember, there's a disconnect there. People that have the money seem to be doing just fine. They're at Nordstrom, like we saw. They're at Michael Kors and all that great stuff. Not the case for some of the others. Salesforce, so up 10% on the day. Really, really good for them. Not so much the earnings, but the guidance going forward. They said they're going to make $7.7 billion more in Q2, which is like a 20% increase year over year. Well, that's good. Good for them there. They've got $42 billion under contract. They call it something. I forget what it's called. It's basically $42 billion in the pipeline that they have yet to bill for. That's a not a guarantee, but it's a closed deal, right? So they're people that have signed up there. Future business or something like that, they call it. State Farm was in their conference call. State Farm is expanding the way they're using Salesforce.com, especially in the hurricane type events or mass catastrophe type event sort of things. 64% of the revenue came from America and does come from America. But what was cool was some of the smaller countries like Europe. And when I say smaller, I mean smaller in terms of their revenue. The sales were even greater than in America. Now, you like to see that because you always worry about a company that has too much revenue from the U.S. Well, if the U.S. gets weak and everybody else gets strong, well, that's not going to help Salesforce, right? So in this case, they have sales outside the U.S. increasing faster than sales in the U.S. You go, okay, great. As long as there's not a worldwide sort of recession, these guys can make it through. They're diversified, right? So they're not focused in on one area there. I think I missed S&P Global. S&P Global, there you go. There, the reason this took down Moody's, these guys just had their earnings, but they were talking about guidance going forward, and they said we don't want to give it anymore. We had guidance. We were telling you what we think. We're not even going to guess. We're just going to pull it back there. And their main reason was weak market conditions. Was what I wrote down there. So that's what I got. All right. What else do we got? Delta. So Delta, I actually thought this was pretty good. Other than the pilot shortage issue that they're having and the money that they're spending, spent $100 million on basically trying to shore up their pilot shortage issues there. But they expect revenues overall to be back to 2019 levels. Remember, not 2020, not 2021. We say 2019. It's kind of like an asterisk. A lot of these companies are taking out COVID. So like Royal Caribbean and things like that, they're not going to ever talk about, oh, we should be back to like 2021 levels. That's not impressive. 2019 was before we knew the world was ending and there was a pandemic and all that stuff. Anyways, they said their revenue should be back by, to that level by next quarter, so good news for them. The problem is it's one of the more expensive majors fundamentally. So they're spending more money. We know the pilot shortage there. We know that they've reduced their flight lineup largely because of that. And so it's hard to get excited about this stock unless it's trading at a real discount. It's just not a discount right now. It is not there. Anyways, I'll take your questions if you happen to have any, and we'll see what we can do while we do it. Kirk says, I'm calling it, man. It's a recession. It's just it. What do you want me to say? Well, we'll see. Yeah, the next major thing, yeah. You've got, of course, the rate decision coming up here in June, and then you'll have you got the midterm elections. You know what I mean? I don't know what to say. It's just you've got things sort of haywire right now and have been, and now you're going to have election season try to draw your attention from that. Yeah. I don't really care about elections much. My biggest sort of problem with that is we're talking about fighting. We're not talking about what are you going to do? Right, you over there that wants to run for senator. What do you got? Dr. Oz, what are your ideas? What are your thoughts? Gets drowned out by all the fighting and the re-voting and all that crap, and then that part's kind of a bummer. Jay Roberts says, is unlimited growth of the economy stock market possible? Can the economy grow forever, or will there come a time in the future growth is no longer expected? Yeah, absolutely. So there are many times over history where growth is negative, which means we're not expecting growth. That's actually very common. So there has never been such a thing as unlimited growth without hiccups and pullbacks along the way. It works just like a stock. What are the chances of stocks moving to the upper end of this downtrend channel? Looks like we're going to make new lows. If we made new lows, honestly, I would be all in. I think that's an all in moment, because think of the chaos at the moment you hit new lows. That's like the peak of people giving up at that point. So there'd be some flush of some percentage there, and you'd have to imagine that's people going, throw in the towel. So, I mean, could you imagine though? Like, and this very well could happen, but you have this monster move, which is just mean reversion. That's fine. If we don't go sideways and we just start reversing this, you go, oh, Jamie Dimon was right. Everybody's right. Oh my gosh, this is really like catastrophe type stuff here. I kind of think that's your moment to go, well, there's the real discount. That's my reason, right? Now I've got such a severe discount. It'd be greater than COVID. It'd be starting to near the financial crisis levels there. So I don't think it's out of the question. It's just everyone's looking for the market to just go sideways. It'll be a wide range, but just go sideways for a while. We'll see. Audio changes every time we really I don't know why. You're trimming out some small cap oil there. There you go. You want to reload, so you hope it comes back. Wow. Well, thank you, Ashraf. Thanks for the birthday wishes there. Oh man, I appreciate it there. For 50, how about a face tattoo? So I told my wife, like, when I was going to do this, I was like, why would I tattoo that? I mean, what would get more attention? Probably lose a lot of credibility, but I'm like, if you tattooed that on yourself, you better be able to live up to what it says, right? Like, because you got to imagine that's going to close some doors. Imagine if, like, that was me, that was my thing. You guys would be like, why am I watching this guy? Clearly he doesn't make good choices with his hands. Not that tattoos are bad. It's just, is that the best location? But I honestly, I think it's an omen, the fact that that works. I'm just saying. Anyways, going all in, 3,400 S&P. That'd be quite a flush, but I see what you're saying. Chris going against the stats there. Yeah, all right. Cool. I mean, I wouldn't complain with you. I'll ride that with you. Yeah. Be the heat, stay the course. I see what we're doing here. Well, I will wrap things up here and get out of your way. That is all I had to cover here today. We'll be back tomorrow to do it all over again. And appreciate you guys hanging out with us. Tell them bye. You like Louie? He's hanging in there, man. Anyways, enjoy the rest of your day, and we'll see you tomorrow. Adios.